Holy smokes, ladies and gentlemen, we have lots of Tesla stock breaking news as well as the broader markets and what Trump just had to say. It's official. We've kind of just created a strategic Bitcoin reserve. Among other things, he's really threatening Jerome Powell to heed his warning earlier today that the Fed should immediately cut rates. Ladies and gentlemen, we have all of this for you and much more, including the economic data coming out tomorrow mornings as well as the earnings. So work is cut out for us. Let's go ahead and get started. It is being reported that Trump is seeking an immediate meeting with Putin to end the Ukraine war, claiming Zelensky is ready to negotiate. Donald Trump has signed an executive order to develop a, quote, national digital asset stockpile as per Fox News. President Trump has also signed an executive order to create, quote, a crypto working group as per Reuters. These are his first crypto-related executive orders. Trump also signed an executive order related to AI. Now, we do have another update for you in regards to the Model Y. Matthew Dungan Ryan on X says, I believe Tesla will open US-Canada orders for the Model Y refresh this evening. And if that is true, that is big news for Tesla. That's really gonna be a powerhouse for Tesla deliveries in the coming quarters. Model Y is already the world's best-selling vehicle, and Tesla just made it better. I mean, what's there not to like about that? Considering Tesla stock has really been in the dumps lately, really not doing much of anything, that would be some very good news. Tesla's stock even today was down about 1%, and it really just hasn't done much of anything. Like, it hasn't been terrible, but we haven't went higher, and markets are breaking out to a new all-time high. Part of this is rumors that Elon Musk is going to buy TikTok, and those rumors will be with us until Elon confirms or denies this. Now, I think a lot of people draw parallel conclusions to what happened in 2022 when Elon Musk had to sell a bunch of Tesla stock to buy Twitter. I think this is a little bit different considering in 2022 Tesla was cutting prices aggressively, and you did have a situation where auto gross margins were basically collapsing at the time. Then you add 100% chance of a recession from Bloomberg. At the time, everyone thought we were heading into recession. Mix all of that together, Elon Musk buying Twitter, and you had a perfect storm, if you will, to send Tesla stock down about 70% in the course of just a couple of months. I don't think it would be that dramatic, but it would still be negative selling pressure on Tesla regardless. And that's just kind of making Wall Street a little bit nervous, which is understandable. Now, if you guys remember, Elon Musk tried to back out of the Twitter acquisition and, well, was forced to buy Twitter because he signed a contract. Okay, so that was a good thing that he bought Twitter. We're all thankful that he bought Twitter, but, is he going to make that same, I don't know if you call it a mistake today, probably not, but is he going to make that same kind of commitment? Probably not, and that's most likely why we have not heard anything yet. If he is interested in buying TikTok, I think he wants to make the best deal possible, and it's probably just not the right timing for that. I'm sure part of him does want to buy TikTok, and he's probably in communication with some of his billionaire buddies, and they're trying to figure out a deal to get that done with as minimal damage as possible to Tesla stock. Now, Donald Trump says that he expects the Fed to heed his input on interest rates and is open to discussing them with Powell. We have a precedence for this. Last time this happened, where Trump essentially tried to bully Powell, he said he was going to fire him, was in 2019. And we're going to take a look at the charts in just a moment, but essentially markets had a bit of a freak out. Because, I mean, if Powell were to resign or something, who's going to take over and what would that policy look like? And overall, it's drama, and markets don't really like drama nor uncertainty. Now, this time around, could that be positive? Potentially. Now, it is being reported today that Russian and Ukrainian channels are claiming that Russian President Vladimir Putin has been rushed to the Kremlin, which is around midnight in Moscow. And you could see this video that says Putin's motorcade has been seen heading to the Kremlin about an hour ago, unusually late at night. This follows a Reuters report stating that Trump has requested an immediate meeting with Putin to end the war in Ukraine, that Volodymyr Zelensky wants to sit down and negotiate. This could be good news for markets, for sure a win for humanity. Porter also asked Trump, he said, quote, after you made the Stargate announcement, Elon Musk tweeted that they don't have the money. Is that true? Trump says, I don't know. They're putting up the money. The government isn't. They're very rich people. I hope they do. Elon doesn't like one of those people. And Trump yet again reiterates that he expects the Fed will listen to him on interest rate cuts. President Trump has also signed an executive order to ban central bank digital currencies. And there's a lot of confusion about this, so let me clear the air. Essentially, the bull thesis on crypto is it's decentralized. It's not controlled by one central entity. Central bank digital currency is the exact opposite of that. It's controlled by a central bank. So that's not good for crypto, to start getting the government involved in putting out their own crypto. So this is actually very, very bullish crypto, bullish Bitcoin, bullish really all of them. See this volatility here, where in, anywhere from around May of 2019 to October of 2019, markets were very volatile. You had really three distinct pullbacks here, and most of this was due to Trump threatening Powell, telling him he needs to cut rates, and if he doesn't, he's going to be fired, and so on and so forth. What happened after Powell actually listened and started cutting rates was the markets took off. I mean, the S&P from October of 2019, from this low here, when Powell basically capitulated to Trump, to the pre-Roni Rona sell-off, the S&P went up almost 20%. In about 4 months. It was an aggressive rally to the upside. The S&P was actually overbought on the RSI. So hey, if Powell indeed does capitulate again to Trump, if Trump can have his way with Powell and make Powell see things for how they are, that keeping rates higher is really just adding to inflationary pressures, then Powell cutting rates is going to be good. It's going to bring down inflation. It's going to allow for the markets to have a broader base rally and for the consumer to maybe start to get back on solid footing again. Let me explain this for anyone that is ignorant or does not know because they just don't want to learn. But these days, raising rates is not like it was back in the day. When you had hyperinflation in the 70s and in the 80s, raising rates did a lot to actually affect inflation, okay? You had a lot less services then. You had more of an economy that was centralized, like homes, for an example, okay? Families were being created, people had to move, and it really slowed things down. These days, after rates being low for 15 years, it doesn't affect as much. Now, it does in certain areas. We've seen the effects of this. If you're looking at auto demand, loan demand, housing demand, the areas in which interest rates actually affect have been negatively affected. But raising interest rates does not prevent someone from going to a concert or going out to eat with their family or, doing this or that, traveling for that matter. Raising rates has no impact on those things, virtually none at all. In fact, it could be enabling more of those things as people with more money are getting paid 5% risk-free to do those things. So nowadays, keeping rates higher for longer is just hurting things, because the actual inflation rate that we're seeing now is back to the Fed's target. It's back to 2%. Okay, if you look at current market rents, if you look at current gauges of inflation, it's back to the Fed's 2% target. But when you're using homeowner equivalent rents and, rates being as high as they are, and really 10-year treasury yields being as high as they are, keeping mortgage prices so high, people feel like they can rent their homes out for more than they actually can. Okay? That's keeping inflation high. And auto insurance just kind of has structural issues. That's another component of this, but you can almost lump that together as well with higher rates, higher cost of financing. You can make an argument that higher rates are also affecting auto insurance to a smaller degree than home insurance, but still nonetheless affecting auto insurance rates. So it's fascinating. If Powell does listen to Trump, that could be a big positive for Tesla stock. Now, immediately, maybe not. Immediately, could you see some uncertainties? Could you see some, backlash? Of course. But if history repeats itself, that would be setting the stage for a massive run. And who does the best when rates fall? It is obviously Tesla. Now, Tesla in the near term is going to move off of rumors of Elon Musk buying TikTok. It's going to move off of potentially the new Model Y that could be coming out here any moment, at least for pre-order launch in the US and Canada. And it's going to move on Tesla's earnings, which will take place next week. And the big thing you really need to know there is we get deliveries ahead of time. So the numbers are really not going to shock us. There's one component in the numbers that really matters, and that's auto gross margins. Okay, that is the only thing that really moves the needle for Tesla, if you will. Auto gross margins. It's more about the commentary. Now we've gotten a lot of speculation recently that the Model Y is selling very well in China. Is that true? We'll see. We're going to get some commentary on that. We've also gotten news recently that Tesla could be set to start production of around 30,000 Optimus bots, a run rate of 30,000 Optimus bots, which is about 600 bots per week by the end of this year. That is not priced into Tesla stock. And if we start actually manufacturing Optimus in that scale, that's going to be seen as a major positive for Tesla coming next week. Then the obvious two ones are lower priced Teslas. Are they still coming in the first half of this year? Are we going to get the robotaxi network in the first half? You could even get away with the second half this year. Like first half, second half doesn't really matter for that as long as it does come this year and it's not a next year type of thing. Now, on the other side, things that maybe are not priced in as well is like the news we got today. That Tesla is offering free trials of advanced autopilot and ASS services in China. That is likely setting the stage for an FSD launch in China, which Tesla in December stated they were planning on launching full self-driving, not advanced autopilot or just autopilot or ASS, but full self-driving in China and in Europe in the first half of 2025. I feel like a lot of people have just forgotten about that, but I did the math earlier in the video today, and that could add about $2 billion of profitability. If the price of that's about $5,000 in China, you have a roughly 20% take rate. That could add about 60 cents to EPS, slap 120 times multiple on that. That could add about $70 to almost $73 per share to Tesla stock. Just that alone. So considering from here, you could see Tesla, back to about $484 on that news alone. And that would be what you would call justified. And that's not to mention everything else. That would be an upside move of about 17.5% from here. So that would be quite impactful for Tesla's numbers. And those are the big things that are really going to move the needle next week for Tesla stock. Now, here in just the next couple of hours, we will get an interest rate hike. At least that's what we're expecting out of the Bank of Japan. That's fine as long as it's not bigger than expected. Okay, we're expecting rates are going to go up 0.25%. If the Bank of Japan wants to give us a surprise and raise rates, say 0.5%, or the Bank of Japan does like weird interest rate hikes, so they can do like 0.1%, so they could do theoretically like 0.35% of a rate hike. That would take their rates to like 0.7%. It's kind of weird how the Bank of Japan actually does it, or it would take it technically to 0.6%. That's what you want to watch for if it's higher than expected or not, or meets expectations. A lot of people are kind of nervous heading into this Bank of Japan Fed meeting because, I mean, last time the Bank of Japan raised rates, the Nasdaq was down over 6% the next day. So that was rough. That was on August 5th, the yen carry trade disaster. And let's see, but I don't think that's going to happen again. And then tomorrow morning, you have S&P Global Composite PMI, Manufacturing PMI, and Services PMIs, as well as existing home sales for December and existing home sales month over month. You will get final numbers for 5-year and 1-year inflation expectations. That's probably going to be one of the bigger catalysts tomorrow morning. If those inflation expectations come down, that's good. If they go up, that's bad. It's pretty straightforward. You also get current conditions and consumer expectations. Now, with that said, final option activity for Tesla stock today was 191 different trades, totaling $181 million. With a positive order value of 66%, that's about 14% more positive than yesterday. What's really looking good is the option activity today for next week's expiration. Tomorrow's expiration is 60% calls, 40% puts, but next Friday's expiration, 72% calls and 27.87% puts. Over a 1-to-1 ratio. It's almost a 2-to-1 ratio, a little bit more than that, of calls versus puts. So people are really positioning for Tesla earnings to be positive for the stock. Now, even as Warren Pies says today, CoreLogic single family rent index came in at a 14-year low today. This is a much bigger deal than yesterday's NTRR collapse. Big shelter disinflation impulse ahead. That's interesting. Again, here's the chart. It's basically collapsing because if Powell does want an excuse to cut rates, if Trump does kind of pressure Powell into cutting rates, this is one thing that he could point to and say, there's enough evidence that inflation is going to continue to make progress. And he may actually walk back some of the whole tariffs are going to cause inflation argument because there is no evidence of that. And if you look at something like the United States debt tracker, you can see in real time, Doge has already cut $12.2 billion of government spending. $12.2 billion. It hasn't even been that long. Okay? And, this is going to be very disinflationary. After all, inflation is only government spending. Like, that's all inflation is government spending with supply shocks every now and again. Supply shocks can obviously exacerbate a problem, but we don't have that right now. Now, Tesla has obviously lagged behind the S&P, lagged behind the broader markets. I think that's going to change dramatically coming, especially after Tesla's earnings. Again, there is the black cloud, if you will, over Tesla stock from a potential Elon Musk acquisition of TikTok. But that will eventually be a positive catalyst as well, especially if Elon is not planning on buying TikTok. That news could come out at any moment. So even though there is that risk for Tesla, I see things as way skewed towards you want to be in Tesla versus you're going to get a better chance to buy Tesla. Like Fed, they're going to be cutting rates. Trump is basically telling them or ordering them to cut rates. They're going to be cutting rates more than expected. That's going to bring down inflation faster than people expect. Again, the housing data today really confirmed that shelter no longer has any inflation. Whether you're thinking about Optimus production by the end of this year, Robotaxi production by the end of this year, new Model Y coming literally any moment, cheaper Teslas coming potentially in just the next month or two, couple of months. These are very bullish catalysts. And I mean, besides Elon buying TikTok, like, what's the bear thesis right now? I'm really struggling to come to a bear thesis in Tesla stock unless the economy just weakens dramatically. But that doesn't seem likely at this point. If anything, I mean, Wall Street was scared about tariffs and all of this causing inflation. The only thing I've noticed since the election is companies actually want to do business. Countries actually want to do business with the U.S. Maybe that's the threat of tariffs. I mean, that's probably has something to do with it. But people want to do business with the U.S. And that in the investment world is a positive. So just my thoughts. Let me know what you guys think about this information down below in the comments section. Again, stay on lookout for the refreshed Model Y to go online for the US and Canada potentially tonight. Could be happening tonight. Remember, we're not going to get some big event for the refreshed Model Y, just like we did not for the Model 3. Just one day, it went on pre-sale. That's what's going to happen for the Model Y because it's not a new product. It's just an upgraded existing product. So again, let me know what you guys think down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.